In today's economic climate, investors are increasingly looking for stable growth. The Credit Suisse Momentum Index uses an innovative design to help investors navigate a range of constantly evolving markets. The index builds on Credit Suisse's 20-plus years of experience in designing systematic strategies. Here's how it works. The index follows a rules-based methodology based on 4 popular financial principles to assess the optimal exposure for the index: diversification, momentum, risk-adjusted weights, and risk control. Because each asset class may react differently to the same economic event, spreading exposure across various regions and asset classes can help improve the stability of returns over the long term. The Credit Suisse Momentum Index aims to identify global investment opportunities through a portfolio of 10 constituents from across the U.S., the UK, the European Union, and Japan that are grouped in 3 asset classes: equities, bonds, and commodities. Then, the index uses a unique and systematic approach to try and benefit from momentum, the financial concept that past performance tends to predict future performance in the short term. How? By analyzing and comparing past performances for each component. As a result, every month the 10 components will be ranked according to their momentum signal, and the index will dynamically shift towards the 8 components exhibiting the strongest trends and away from the 2 components exhibiting the weakest trends. From there, the index uses an adaptive weighting approach, whose objective is to mitigate the index exposure to risk. The index thus allocates a greater weight to less risky components while reducing exposure to riskier components. These 2 steps are processed on a monthly basis so that the index can adapt to constant changes in market conditions. Finally, the index implements a daily risk control mechanism intended to stabilize the performance of the index. The objective of this final step is to maintain the risk budget of the index at or around 5% every day. How does it work? The index will rebalance daily to maintain its exposure to the risk-adjusted allocation when markets are calm, or switch to cash during periods of market stress. The cash is non-remunerating, which means it does not earn interest. How does that translate into returns? The index didn't exist prior to February 12, 2020. However, going back to 2000 and using hypothetical simulated data, we can see that the Credit Suisse Momentum Index would have achieved an annualized return of 4.4%. The hypothetical simulated data indicates the index would have showed positive annual performance in 18 of the last 20 years. Find out more at indices.creditsuisse.com/CSEAMTM5.